If you want to unlock the secrets to enhancing your day trading, this video is for you. Using one of the most favorite indicators on TradingView, we'll walk through a strategy that performs brilliantly on both short time frames like the 3 and 15-minute charts and longer ones such as the 1 hour and daily charts. This highly flexible approach works across multiple markets, whether you're trading cryptocurrencies like Bitcoin and Ethereum, major forex pairs, or stocks. Let's dive right in. Today, I'm going to show you a strategy built for trend trading. In simple terms, it's about riding the market's momentum, going with the flow when the market is bullish and taking sell trades when it turned bearish. This approach keeps things simple and effective, making it perfect for traders who want to follow the market's natural rhythm. That said, I've tested it 100 times on USD Japanese yen to ensure its reliability. Stick around until the end of the video, where I'll share a full breakdown of my trading results. To get started with this strategy, open TradingView and begin with a clean chart. This setup requires 3 indicators. First, click on the Indicators tab, search for LuxAlgo signals and overlays, and add it twice to your chart. Remember, this is a premium indicator, but using my link, you can save up to 50% on the annual plan. Plus, LuxAlgo offers a 30-day refund policy, so you can test their tools completely risk-free. Next, search for Japanese candles and add it to your chart. Now, switch to Heikin Ashi candles by selecting this option and hide the regular candlesticks by clicking the eyeball. We use Heikin Ashi because their different calculation also affects the indicators, giving us unique signals. To see precise entry and exit points, we've added the Japanese candles indicator. Next, let's adjust the settings for the first LuxAlgo signals and overlays indicator to tailor it for our strategy. First, head to the basic settings, set the presets and filters to None, and choose Confirmation and Exits for the signal mode. Make sure the ML signal classifier is turned off, as we won't be using it. Leave the signal sensitivity at its default value, as we'll rely on the autopilot sensitivity. Next, set the candle coloring to None. For this strategy, we won't be using the smart trail, so make sure to uncheck this option. Instead, we'll be using the trend catcher overlay. Enable it by checking the corresponding box, and here we want to set the reactivity value to 1 for optimal performance. Next, navigate to the advanced settings and set the autopilot sensitivity to long term. After that, disable the dashboard by setting its location to hidden. Finally, go to the style tab and uncheck both the bullish and bearish exit signals. Once that's done, click OK. Now, open the settings for the second signals and overlays indicator. For today's strategy, we'll use the trend catcher overlay again, but this time set the reactivity value to 5. Make sure to enable the trend catcher overlay and disable all other options within this indicator. Next, head over to the style tab and change the trend catcher colors to white and orange. Then, adjust the line thickness to make it more visible. Once you've made these changes, click OK. Now for the fun part. Let's dive into the trading rules and see how this strategy can be used profitably. I'll break it down step by step so you can follow along easily. So let's start with the conditions for a valid buy trade. First, we need to see a buy signal, which can be either a regular or a strong one, serving as our first condition. Next, we check the first trend catcher overlay, which is the fast reactive one, and ensure it is colored green, signaling bullish momentum. Finally, the second trend catcher overlay, the slower reactive one, must be colored white, confirming a steady upward trend and aligning with our strategy's requirements. Once all 3 conditions are met, we enter a buy trade at the close of the confirming candle. For the stop loss, we use the white line from the slower reactive trend catcher to keep the trade protected. For the take profit, we aim for a risk to reward ratio of 1:2, ensuring a balance between risk management and profitability. Now, let's look at another buy trade example. We need to see 3 conditions met. First, a buy signal must appear. Second, at the time of the signal, the fast trend catcher must be green. And lastly, the slow trend catcher line must be colored white. If all these conditions are met at the close of the candle, we take a buy trade. The stop loss goes just below the white line, and we aim for a 1:2 risk to reward ratio for take profit. Now, let's go over the conditions for a valid sell trade. First, we need to see a sell signal. This can be either a regular sell signal or a strong one, and it serves as our first condition for entering a trade. Next, we check the first trend catcher overlay, which is the fast reactive one. For this condition, it must be colored red, indicating bearish momentum. Finally, the second trend catcher overlay, the slower reactive one, must be colored orange. This confirms a steady downward trend and aligns with our strategy's requirements. Once all three conditions are met, we enter a sell trade at the close of the confirming candle. For the stop loss, we use the orange line from the slower reactive trend catcher to keep the trade protected. For the take profit, we target a risk to reward ratio of 1 to 2, maximizing returns while managing potential risks effectively. Now, let's check out another sell trade example. Three conditions must be met. First, there must be a sell signal. Second, the fast trend catcher must be red when the signal appears. And third, the slow trend catcher must be orange colored. When all these criteria are met, we enter a short trade at the close of the candle. The stop loss is placed just above the orange line, and we set our take profit target at a 1 to 2 risk to reward ratio. Now that we've gone over the trade setups, it's time to deliver the backtesting results, just as I promised at the beginning of the video. I've tested this strategy 100 times manually on the USD JPY chart using the 3 minutes time frame, and here are the results. I started with a $1,000 account balance. I used 10% of my account per trade, adjusting as my balance changes with each win or loss. For example, if I profit $100 on a trade, my new balance becomes $1,100, and I use 10% of this updated balance for the next trade. If you want to learn my best strategies for trading crypto, forex, and stocks, check out this video right here.